What's up, everyone? Welcome back to the Outlier podcast. I have my friend Shay from Humbled Trader. I'll throw a link to all of her stuff in the description below. But we're reconnecting because I was out visiting her in Vancouver a couple months ago for a podcast and really enjoyed the conversation. And I think your approach to markets, from what I can tell, is really interesting. One of the things I try to do with my podcast is to put different approaches in front of people, because one of my stances on trading is such a big component of it is finding something that aligns with you and like your personality and like what makes sense for the way you think about the world and markets. And I think you offer a really cool perspective. So thanks for coming to hang out.
Thanks for having me, Eric. It's an honor to be on your podcast.
It's a blast. So first of all, I have to ask, when the summer kept running out there, when I was in Vancouver, it was gorgeous. Is it still like that, or does it start getting like super humid and stuff?
It's gotten hotter now. But it doesn't ever get humid here. It's really dry here on the West Coast. So it's actually really, really nice out. Like if you like the beach, if you like the beach weather, like this is like the perfect time in Vancouver.
Oh, that's awesome. Yeah, when I was out there, I was so stoked with the weather, and I was curious if it starts heating up a ton. So, speaking of heating up, you primarily trade small caps, or not necessarily like penny stocks or anything like that, but not large cap. You're primarily like day trading small cap stocks. Is that correct?
Actually, in the recent years, I trade more of the mid caps and larger cap
Okay.
stocks.
Yeah.
And I'll dabble into the small caps when I see really good opportunities, maybe like a couple of times a month.
Got it. And just for my understanding, how do you define mid cap? What market cap falls into
Um,
there?
well, I kind of categorize large cap, mid cap all together. Anything over $1 billion market cap, I kind of trade them a certain way. And then
I see.
anything
Okay.
under, I trade it as just small caps.
Got it. Yeah. Then I see how you're breaking it down there.
Mhm.
And so, what do you make of the recent market activity? We've been selling off for a couple days now. How does that impact your approach?
Yeah. So this year, at least for me, what's been working really well for me has just been going long on the large cap stocks. So when the market starts selling off, honestly, the truth be told, it's hard for me to find setups that I really want to trade. So the last couple of days, I just kind of been sitting on the sidelines. I scalped here and there, really, really short term, but I'm I'm honestly just like, looking and waiting for the right opportunities to get back in. So when the market sells off, I'm just kind of on the sidelines. I don't really short sell large caps that much this year. I got them burnt in the beginning of the year, so that's why even though we have short-term pullback, like right now, I'm still just being patient and waiting for the right opportunities.
Got it. Yeah. And another question I had with your approach specifically is, what's your methodology for identifying like these market turnovers? Because I imagine you trade typically shorter term time frames, so that's
Hmm.
one of the benefits, perceivably, in terms of the purpose of day trading, is to be able to catch these kinds of capitulations. What's your approach to doing that?
Yeah, so like you said, the benefit is overnight we don't have any exposure. Unless I'm doing some swing trading. But most of the time I'm day trading, and overnight I don't really have to worry about anything. So if I wake up, I see everything's gapping down, continuing to
I see.
sell off like the last 2 days. I will look at things and wait for maybe 2 hours to see if there's a reversal to get in. But if not, then it doesn't really affect me. So that's one of the benefits of day trading. I don't
I
really
see.
have to time anything.
I see. Yeah.
Yeah.
Yeah. The reason why I kind of dove straight into methodology from the jump is just because I thought the market
Hmm.
activity has been interesting, and I want to dive more into the way you think about it later. But
Hmm.
to take us a couple steps back now, I would love to understand the way that you entered markets, because when you and I had spoke, you'd mentioned that you've tried a few different things, and even now you've mentioned that you've tried a few different things. So walk me through when you started trading, and
Hmm.
then kind of a evolution after that.
Yeah, I when I first kind of learned about what trading is was 10 years ago when I first graduated from college. And in the beginning, I just wanted like fast money, right? I saw the
Mhm.
ads for penny stocks. So back then, my first introduction was like OTC stocks, penny stocks,
Yep.
and we're talking about the stocks that are literally 2 or 3 cents. So that's my very beginning. I was trying to buy pump and dumps and then eventually learn to short sell the pump and dump stocks. So that's kind of my first introduction. And then gradually I realized that, small caps and penny stocks, they're extremely cyclical. Stock market is cyclical in nature, but for the smaller cap stocks, it's even more so. Sometimes the cycles can rotate really fast in the matter of a couple of days or even weeks. So it's at least in the very beginning, as a trader, you're supposed to wait for your opportunity. But for beginners, like they think, and I thought so too. I thought I can come in every single day and there will be the same kind of opportunities every single day, the same strategy. So I thought it's literally just rinse and repeat and trying to, make money print. So that's how I got burnt a lot in the beginning. Like maybe I'll have one good day where the market fits what I'm trying to trade, but the next 2 or 3 days I shouldn't have traded at all, but I still kept on trying to make things happen, trying to squeeze water out of rocks, and then I'll just lose everything. So
Got it.
that's when I started to think about, okay, maybe I should venture into mid caps and large cap stocks and kind of learn, a variety of different strategies that I can, and for different stocks. So I can have maybe, instead of just one or two approach, I can have a playbook of 5 or 6 different strategies to play with, depending on the sentiment of the market.
I see. Now, walk me through the time you spent in each of those stages. So the time that you started with OTC and
Mhm.
then kind of thereafter.
Yeah. So to be honest, my timing when I was actually trading the penny stocks and the small cap stocks in the very beginning, I was just following chat room alerts. It's
Perfect.
not really trading. So, I'm
Love
sure
that.
you know, right? I know, but like, you join those chat rooms and I'm literally just waiting for text alerts. And I'll try to buy the same stocks as whatever the person is trying to tell people to buy. And he got in at $1. I tried to buy the same stock. I got in at 140 and he sold it at 150. And then when I sell, for some reason, the stock's back down to like 110 or $1. So that's honestly the very beginning
I
stages of
see.
my trading career, if you even call that a career.
That's brutal.
I know, but I feel like it's a hard lesson, but everyone needs to go through that to kind of understand that hey, you kind of need to take this very seriously,
Yeah.
instead of like a get rich quick scheme.
Well, it's funny for a few reasons too, because one of the first things you mentioned was the idea of like fast money. And
Yeah.
that is like one of the underpinning features that brings all of us to the
Yes.
markets. It's why I started trading, right? Like all of us start this with this idea of like fast money. And then the longer you're around the game, the more you realize like, yeah, like you can make a lot of money trading, but I wouldn't call it fast money. It's kind of money that's, earned over time and then you got to keep
Mhm.
it. But yeah, I really commiserate with that. And then the other thing I was laughing about is when you were talking about like the alert service. Funny
Yeah.
enough, like I didn't even know what those were. I found out what they were like 2 years ago because somebody
Wait,
on my
seriously?
somebody yes, because the way that I trade is completely different. I'm like in a vacuum. I'm just looking at my stuff. I really don't care what anybody else is doing. Like I just do my stuff. And so, anyways, somebody on the YouTube channel, they reached out to me and they were like, "Hey, what do you think of like this like trading room or whatever?" And
Uh-huh.
I was just like, "What the hell is that?" And long story short, I ended up doing like a couple of videos where like I paid to enter these rooms just to see what they
Okay.
were like. And I'm like,
Oh.
this is crazy. Like they call each other analysts. And I'm like, this is nuts.
Oh.
Yeah. So then I made a couple videos just honestly tearing them to shreds because it was the
Right.
dumbest stuff I've ever seen. But yeah, I think it's really topical though that's one of the things you tried. I actually think that's a fantastic experience for you because it lets
Yeah, I
you
agree actually. Yeah.
yeah, because I feel like it lets you become so much closer to the people because that's what most people are doing now, which is kind of
Hmm.
fascinating to me. So then Talk to me about the pivot from there. So you're buying your penny stocks for $1.40, and then you're the alert dude's getting out of there at 150, and then you're like, sick, let me exit mine. And you're like, okay, well, I lost money on this. This isn't that
Yeah.
fun. So
Yeah.
then what led the transition from there?
Yeah. So it's just from a lot of losses. Like in the beginning, I blew up a couple of different accounts, the smaller
Brutal.
accounts. They're like $2,000, $3,000 here and there. So I lost it all. But in the meantime, even though I lost all the money, there were also a couple of times where I actually made money. So that's
Mhm.
why I still feel very encouraged that hey, like it is possible to make money, but maybe I'm just not putting in enough effort to kind of get to kind of understand the process and actually give it like a real shot at trading. I realize that you can make money. So some of those, dreams that's being sold online, some of that is true. Like
Mhm.
you said, you can make a lot of money, but my approach to this is just incorrect. So I
Right.
realized that, maybe like into like 6 months or a year, then that's where I started to put in some real effort and actually some of the things that I did that really changed things around for me. The first one is building my own watch list. So when I said I was in the chat rooms, like I wake up at 6:30 a.m. my local time here. So that would be 9:30 a.m. I used to wake up at market time, market open, and then think I can just trade based on the alerts, right? So I don't do that anymore. So I decided that, hey, I need to wake up earlier. So I'll wake up at least an hour earlier before the market opens, and I'll actually build my own watch list. So that's a huge difference. Even just looking at up your own tickers, planning your own stuff in your own levels, like that's a huge step in the right direction. And it's kind of what differentiates a lot of the we call them like the sheep or like the followers who just wait for the chat room alerts. And then you're kind of starting to becoming more self-sufficient and planning your own trades and kind of start thinking about the trades and your thesis by yourself. So that's a huge step in the right direction, in my opinion, at the time. And then the second thing I did was I start to, manage risk more intentionally. Like I'm planning out my risk along with my watch list before I enter a stock. I'm planning out, oh, if I can, if I allow myself to risk $20, in the stock, for this one, I have to risk 20 cents. That means I can only take a certain amount of shares. So all those were brand new to me at the time, but it seems so simple and so easy now. But back then, I think most traders don't know you're supposed to do those things for yourself. Most people just want to follow and just want to make money right away instead of doing the real work that's required of them.
So you kind of started then saying, okay, I'm late to the punch on these. This isn't working that great. I'm going
Mm-hmm.
to try looking at this stuff myself. One of
Yeah.
the parts that fascinates me so much about your path is that you've really still stayed centric on the same time frames. You said that you swing trade sometimes, but like
Mm-hmm.
you still, it sounds like at that point it was still mostly day trading
Oh
focused. Is
yeah.
that
Mm-hmm.
correct? Okay.
Yes.
And what has led you to really focus on day trading still up until this point? We've started with looking for fast money. We started with small
Mm-hmm.
stocks, accessible penny stocks. You don't need a lot of money. Then you're at this phase now where you're really starting to get into the nuts and bolts of doing this thing, and you still favor the short-term time frames. Why was that?
Yeah, that's a very good question. Because one of the things I realized early on is that I need to focus on trying to learn one thing really well in any given time. So while I did kind of like dabble into swing trading or even options trading here and there, I realized that I wasn't good at those things really, really quick. And I should just focus on the one thing that I'm trying to get better at, which is day trading one or two different strategies. So that's one of the also another pretty important moments for me because most people, and I did this too, when we first start, we'll just kind of jump left and right and trying out different strategies that people are talking about on Reddit, in the chat rooms, on X or Twitter. And then you kind of abandon your original, your craft or the project or the strategy that you are studying in the first place. So I figured out that, whenever I kind of jump ship and chase the next shiny object, I kind of lose focus and kind of have to go back to the beginning all over again. So that's why I decided, hey, I just want to focus on day trading and, don't worry about swing trading. Don't worry about options trading for now. I just want to get really good at this one thing and one thing only.
I love that. I think that that's a really interesting way in looking at it. And that's I think a really important point for people actually. I'm so stoked that you hit that because I think we've all done that where you kind of bounce between things and you don't have much to show for it, which is always frustrating.
Yeah.
When you started getting into trading, what led you into trading specifically? So you were looking for fast money, but there's other ways to get fast money. You could be a drug dealer, you could smuggle people, right? There's lots of careers. What led to trading specifically? Was there something interesting of the markets? Were you doing work in some capacity around markets, or did you just hear of it and that was the route you took?
I started looking at alternative ways to make some more supplemental income because at the time I had a full-time job in film in LA. Rent was expensive and my job and my employment income was not stable. So I think I just kind of started searching up online, like how do you make money online or like side hustle ideas. And trading is the one that kind of appealed more to me because I like the idea that I can I can sit in front of the computer before I go to work and then try to make some money, maybe like $10, $20, $50 here and there, and
Mhm.
then leave and go to work. So I like the fact that I can do the trading in the morning and then go to my job. So that's what really appealed to me. And I think I tried a couple other things too, but this trading ended up is the one I focused on. I tried a bunch of other things at the same time too, but I ended up picking a focus.
Got it. And was the focus on trading because you were finding success, or was it because it was interesting to you, or another reason?
No, I definitely wasn't finding success in the beginning. So, but I'm glad you asked. But I just really liked it. Like I was really drawn to the idea that also like I was super young at the time. I was in my early 20s, but I was super drawn to the fact that every single day is different in trading. I love that there's news that happen overnight can change all the numbers on the screen and the colors, the green and the red. Everything can change every single second. I think I just love the adrenaline and I love that it's ever changing. And it's not just like a typical, office job where you do the same task every single day. So I was young, I was naive, and I was stupid, and I was hooked.
That sounds right. I think that is exactly what goes for all of us. So I'm right there
Yeah.
with you. And so then you started going through this process of doing your own homework, creating your own watch list, waking up earlier so that you could prep for the market, finding your levels. And how long were you doing this for? And is that still kind of what you're doing today? Or was there another pivot at some point beyond the pivot from small caps to mid and large cap stocks?
That's a good question because I think my process of pre-market planning of scanning for stocks to trade, reading the news, and then creating my watch list has been pretty much very, very similar since that beginning stage. I kind of built the foundation from there, and the small things changed here and there, like the little details. But for the most part, my process, the big picture process, has been the same for the last. I've been trading for 10 years. For the last 7 years, it's been the same, where I'm scanning for stocks, and looking at the charts, I look at news, and then I plan the individual plays or the potential trades that I'm gonna trade. So for the most part, it's been the same, even like after all these years.
I see. Yeah, that makes a ton of sense. I think I find that too. Like once you kind of find your rhythm, that it's pretty easy to sustain it. So that I think that that makes a lot of sense, especially with your approach. What time frames during the day do you like to trade the most? Because I know, at least from an options trading perspective, which is primarily what I do, there are different times of days that mean different things to me. And I'm wondering how you view the trading day.
Yeah. So I usually start from looking at the daily charts. The daily is probably the time frame, in my opinion, for my style is the most important. That's where kind of I'll have a general, at least technical bias along with the news and all that, of course. But daily chart is where I plan out most of my trades using the daily levels, the higher days, the daily resistance, the 52-week highs. Those are probably the most important levels I'll look at. And then once I have that information, then I'll take a look at the intraday charts. I'm using a lot of the 5-minute charts nowadays. So that's one small detail that changed from 10 years ago. I used to use a lot more 1-minute charts. Nowadays, I use the 5-minute charts, and the shortest time frame I'll use is 2-minute charts.
Got it. And do you weight those charts differently for different products, or is the weighting about the same in terms of the time frames? Like if you're trading a mid cap stock versus a large cap stock, does the way you perceive those time frames carry over, or does one get more weight than the other?
Yeah. So the low, so we trade a lot of lower float small cap stocks. That's the kind of small cap stocks I would trade when I do trade them. So the lower the float and the smaller the market cap, the shorter time frame I go. So for those, usually I'll use a 2-minute chart. And then I'll look at 5-minute as a reference. So anything under $1 billion market cap, I will most likely be using a 2-minute time frame. And anything over $1 billion market cap, I'll be using the 5-minute or sometimes even the 15 minutes time frame.
Got it. Yeah, I'm following you. Now, we have to talk about this because you already spilled the beans that you tried trading options. You told me this when we had spoke. And as soon as I heard it, I was like, damn it. We were so close to converting another one. We were right there. And then it didn't work, probably because of just call YOLOs, I would guess. But them damn call YOLOs. So
Yes.
we have to talk about the options because I got to tell you, one of my long-term roadmaps is like maybe over the next like 30 years,
Okay.
I'm just going to slowly try to move you towards options just a little bit, maybe so that whenever we catch up once in a while, you're like, well, I got one trade on that'll be a big win for us out there. So I'm working on converting you at least to a degree, but to start the conversion, I need to understand the history with the product. So when did you first stumble into options and how did it go?
Yeah. So we'll take a guess. What do you think is the first kind of options trading style or approach I took?
I would
Just
have
take a wild guess.
I would have to guess out of the money calls, and I would guess shorter term expiration. I don't know what catalyst you would choose because one of the interesting thing about options is a lot of the small cap stocks you might have been trading at the time, they might not even have options.
Mm-hmm.
So that part I don't have a good read on, but that would be my first level guess is that you're using further out of the money options because they're cheaper and they can compound more, and not going too far out in time because they're cheaper by not going too far out in time. That's the guess.
Yeah, you're close. I was trading the zero DTEs. And I was
Okay.
trying to scalp those.
So about as short as you can go. Got it. I
Yeah,
needed to
yeah.
shorten my time frame even more.
Oh my God. Yeah, it was so wild. So especially on Fridays, I used to. So at this point, I was still in a chat room, but the way I used the chat room was very different. I'm just trying to see what other people's ideas are, and I'll see if there's anything I can trade out of their ideas, like my own strategies.
Right.
But in the same chat room, there's like an options chat room. So the stuff they're doing seems extremely intriguing. You take these options contracts at only 50 cents, and then if it hits, it can hit 500% in one day.
Mm-hmm.
So that's kind of what attracted me, and at this point I was still already finding some success in trading stocks. So I just decided that let me try this options thing on the side, like why not. So I kind of took like a course in options trading, and then I just started trading these zero DTEs like right away. And then a lot of the instruments I was trading were just like SPY. Especially like you said, the YOLO calls expire in the same week or sometimes the same day. I remember traded a lot of Tesla when Tesla was really, really hot in 2016, 2017. That was really fun, but I don't think I ever made money from zero DTEs. Like I'll make money here and there, but then when I lose money, I'll lose 100% of it, right?
Right.
So that kind of just cancels out everything. But it was fun, I'll say that. But also one of my blow ups after one of my blow ups into my year 4 was because of options trading, because of the zero DTEs.
That's interesting that you blew up that way too, because I assume you were buying options, yeah?
Yes, yes.
Yeah. So to me, I actually find the idea of blowing up through buying options difficult because your max loss is defined at entry. So were you just sizing things like egregiously large, or what happened there?
No, but it kind of makes sense because when I lose 100% of it.
Hmm.
And sure, when I make money, I'm not I wasn't that good. So it's not like I'm making money like 1,000%, 500% all the time. Well, sometimes when
Hmm.
I make money, it could be 50%, 40% less. Maybe you have like one or two, couple 100% or 1,000%. But I think in the long run, my win rate for the zero DTE trades was just so low that no, all the 100% losses on those trades canceled out everything and more.
I see. Okay, so
Yeah.
when you're saying okay, I took blow up to be more of like a kinetic event, like in a single day, big move knocked us out. But it sounds more like you like over time there was an erosion that essentially zeroed the account out.
Yes, yes.
Okay,
Yeah.
got it. Yeah, it breaks my heart because whatever course you took that sent you into zero DTEs, we need to have a conversation with that course director, whoever that is, and be like, what are we doing here? But
I think
okay.
they're not around anymore, I think. I
Yeah,
don't
you don't
know.
say. Tell me more.
Yeah.
I'm blown away that that could possibly be the case. Well, I still think for the way that you trade now, that options could be really good, but it
Mm.
would, I think you would have to change the way that you think about them and the way you use them. But we'll see. That'll be a future project where maybe I can slowly start subliminally messaging like long calls and short calls and maybe get you trading some volatility in there. I don't know. We'll see.
Just send me
Well,
those alerts.
that's it. I forgot. I just need to do alerts.
Yeah,
How annoying is
exactly.
that? How annoying is that when people ask about, are you going to do alerts? Does that bother you?
Yeah, it does. Like I'm like,
Same.
why would you want that upon yourself to kind of grow a dependency on someone else
Right.
telling you what to do? It's your money. Like you need to be able to make the decisions for yourself. I almost feel offended for them when they
Let,
ask me those things.
the part that I always find so funny about it is I think a lot of us get into trading for the idea of making money so that
Yeah,
then you achieve financial freedom. And then you, exactly as you say, you tie it, your financial freedom is now predicated on this other person.
I
Again,
know.
it's essentially just having a boss again.
I
So
know. Yeah.
I find that connection to be pretty funny.
It's
But
so ironic too.
yeah, it is. It's well, the pursuit of easy money is always alluring to everybody. It's why so many people will go play the lottery, right? Even though from a probability standpoint, it's not necessarily a great way. People will still do it. So yeah, I could always see there being a group like that. When you look at your community that you've built, how have they evolved alongside your evolution of trading? Have they broadly moved with you? Do they do a lot of different things, but there's crossover? How does that work for your people?
Yeah, that's a good question because I would say most people who join in the first place in the let's say the first month, and it's understandable. Most people are more clueless. They kind of need a guidance. So they are more likely the beginners, the new community members. They're more likely to kind of try to do exactly how I teach them the strategies. Like we have video lessons, they'll try to do everything like by the book and copy exactly what I'm looking for, which is great. I rather them do that than to try to like figure out zero DTEs or try to trade stocks. But I think in the beginning, most people are going to be very by the book. oh, let's say I'm saying, oh, in the strategy, look for 20% gap, they'll do exactly that. And I think that's fine. But I think gradually, most traders and most members, after at least 3 or 6 months of very intensive learning and trading, they start to develop their own way of thinking. They start to change the strategy I teach them to kind of modify, to change and to fit their own style. So maybe my strategy, the first one I taught them was, a little bit too conservative. Maybe they decide that, hey, like instead of risking 2%, I want to risk 5%. So, but then by that time, it's up to them. They have the proper foundation, they know the tools, and they have the knowledge to kind of tweak the strategies, tweak the criteria, tweak the scanners to fit what works the best for them according to their risk tolerance. So in the beginning, everyone's gonna be by the book, trying to copy exactly what you say in the video lessons. But at the end, after a year, after 2 years, they usually develop their own style and they know exactly what they're looking for. And now a lot of the people who's been here for a while, I'm asking for their ideas. I'm asking to see what they're looking at, because I know by now how they trade. They have almost like a different strategy after all this time. So it's kind of the reverse now. I'll try to like pick their brain and try to see what they're looking at and see if there's anything I can use in my own strategies and try to apply my own thing to make money. So that's the
Okay.
thing I love about trading. You can be very flexible,
Yeah.
and you can make things your own.
Yeah, well, and it's also cool that you guys create an environment for that, because like we were talking about in the beginning, I actually think that's probably one of the most defining features of somebody that can be successful at this long term, is doing exactly that. It's taking the time to like build something that makes sense for them. When you look over your trading career, what are some of the things that you used to do that as you think about it, you're like, why would I ever do that? But you did. What kind of things like that exist for you?
Yeah, I think in the very beginning, I was very opposed to trading the mega caps, like the Apples, the Amazons, the Google, the Nvidia. At the time, it didn't make sense because it felt like a very, well, you trade options. I feel like you might agree with this. It felt like a very inefficient way of using your capital, right? That's it. Nvidia is now like what, what was it, $140 or something like
Mhm.
that. If I trade it, I'll probably have to, like $140. Like at the time I was trading a small account. I couldn't afford that many shares to make money. So like I can probably take what, 50 shares and then try to make $1, $2 from that. This is day trading. So at the time it didn't make sense that why would anyone want to trade that? But I think now I'm more open to the idea and actually prefer trading the big caps over the small caps because they are a lot more, in my opinion, at least intraday, they're a lot more predictable. They kind of follow trends a certain way, and there are certain chart patterns and price action that you just see repeatedly again and again in all these mega cap stocks. So now I'm a lot more open to the idea of, let's just say, trading Nvidia, the actual stock, and something like Apple, Amazon, or even Tesla. Like I'll trade them. I'll take the actual shares.
Got it. That's really interesting. When you're deciphering like the predictability of something like mega cap versus another size company, are you running like a broad style analysis, or is it kind of pattern building by seeing, and you're just looking at it every day and that's how you're building your understanding of the relationship with some of these patterns?
Yeah, so I used to study a lot of charts. I still do, but obviously not as intensive as I did the first 4 years. So I used to save charts and I'll analyze, I'll save the different time frames we talked about, like 1 minute, 1 minute chart, daily chart, 5 minute chart. So I used to save those charts for all the stocks I've traded. And 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 it's not like I memorize a pattern, but over time you kind of start seeing some similar trend and some similar patterns. Let's say the morning setup looks a certain way on the 5 minute chart, and there's negative news in the market. There's certain things that you can't predict them or guarantee it 100% all the time, but there's certain things that you start to see that, hey, like maybe I can use educated guess and then try to build a strategy around, when the chart sets up this way, when it gaps up and sells off to the middle of the day, what's likely going to happen. So to answer your questions, a lot of that is just based on past experience and seeing the same charts and the same price action over and over again.
So a lot of observation time. Yeah.
Yeah.
That's one of the things that always fascinated me with like pattern style trading, because I tend to apply a bit of a quantitative approach with a practical approach. I'm like a middle ground between something like what you would do versus what like a quant would do. I'm like the I don't know, I'm kind of like the idiot that does both and not that great. That's really what it boils down to. So it's kind of cool that you've picked a specific learning modality that is really connected for you. When you're looking at these different patterns and stuff, especially when it comes to short-term trading timeframes, there's a million of them. You see so many people talk about all of these different kinds of candlestick patterns, setups, price levels, stuff like that. How did you start to navigate to like what worked for you? How did you find that? Because one of the things I'm trying to strike at here is when you're first starting, if you're trying to find something that works, you try it for 2 weeks, it doesn't work, and then you dump it. That might have been the right thing, but you just might not have tried it for long enough. So I feel like that's a really difficult balance to strike. And obviously you found a way to navigate that. So could you talk us through it?
Yeah, I think that's a common question I see a lot as well. But I think usually when people ask me that, or like a lot of those are actually my members in my community. When they say that to me, I'm like, okay, show me your journal. Show me the charts. Show me the charts you saved. That's it. And then they usually say, oh, I don't have it. So a lot of times they might be trying that set strategy or that set chart pattern or that set setup for 2 weeks. But when they don't actually journal it down and save the charts, then I don't think you are actually testing the strategy the right way when you are not recording the actual data. So the way I look at it is at least you need at least 50 sample size of those trades, and everything needs to be journaled, and then the charts need to be saved. And then for you to go back and actually look at, okay, like, is it me or is it a strategy? I think people have to kind of answer that question themselves honestly. So that's how I kind of start to navigate building setup, is from saving tons of charts, whether it's the actual strategies I traded or the ones I missed but I didn't trade. I still see a similar setup. I'll save it. I'll collect a bunch of sample sizes of a particular strategy that I think, hey, there might be a pattern there, or there might be a strategy here that's repeatable. Start with collecting charts. And then I used to be very, very big into spreadsheets. So I'll spreadsheet everything. Let's say, this small cap stock, when it gaps up over 50%, it's likely to have like an all day fade. And I'll track the success of that and what's a percentage of the fade can be. What I'm saying? Like when a stock gaps up, we're talking about just small cap stocks. What's the probability of this happening? And I'll even track it by months. So, during summer months, the probability is like 30% or lower. During the winter and the fall and the spring, the probability is a lot higher. So I used to track everything. So that's how I started to build at least some sense of, okay, pattern recognition, in which I call this actual valuable data collection, actual valuable information, as opposed to just trying a setup for 2 weeks, thinking you actually tried the strategy, but in fact, you didn't record any of it. I hope this makes sense. Sorry, I feel like
it makes a ton of sense. It makes a ton of sense, because I find people do that with a ton of things across trading, where they haphazardly try something. There's no record to actually refer what the outcomes were.
Yeah.
And those kinds of things are so prone to path. And that's kind of what I was highlighting by talking that through with you, because if you try something for 2 weeks and then you just bail on it, that thing might have worked, but you don't have a good record to be able to say objectively yes or no, and you might not have let it try long enough. Now, going back to the broader question though, when you first started trading like these different setups and patterns, how did you cull through the thousands that are there and say, I'm going to try these 15, these 10, these 5, whatever, and see how these work? And then how did you narrow that down? Because when I think about the prospects of day trading via some sort of like candlestick patterns or just price behavior on an intraday time frame, I think that's probably one of the most common things I see people talk about is like, how do you pick? Are you going to use a doji? Are you going to use the hammers? Like they use all the individual candles, then setups of candles, like the 3 up, 3 down, like all those kinds of things. How did you sift through the broad universe of intraday patterns into the things you thought were worth testing? And then from there, how did you narrow that down further?
So I think there's two aspects to this question. The first one is I don't actually I know candlestick patterns and chart patterns are, I know people use them interchangeably, but I don't actually use the candlestick patterns like, shooting
Okay.
star. Like I don't actually use that. But I look at the bigger picture, like what the entire day's chart look like, whether it has higher lows. I look at that and what the trend looks like. So I more so look at candlestick trends than
Okay.
the individual candlestick patterns. But that's my style of looking at charts. But when I look at the entire chart, I feel like I can see a bigger picture. Now, where does that initial inspiration come from? Well, it comes from like the initial when I was in the chat rooms and I took a lot of courses. While while the chat room alerts don't work, I do believe in like some of the educations they taught you, even though you cannot just, like I said, you cannot take someone's strategy and kind of completely copy it and make it work for you. A lot of times you can be inspired by it, and even if it doesn't work for you at the end, you know, you can be inspired by it and look at the chart that maybe, you know, perhaps somebody is doing a dip buy strategy. Even if that actual execution strategy doesn't work for me, I look at the charts. I look at the chart patterns they're talking about, what the daily chart looks like, what the intraday looks like, and then I'll start seeing that, okay, like, you know, even though I cannot execute the trades like he or she taught me to, I can still trade the same chart in my own way. So that's what I mean by I was really inspired by a lot of the common chart patterns the small cap traders use. Some common ones are like the first green day, the first red day, or like the parabolic charts. Those are really, really common chart patterns with very similar appearances in the daily charts all the time for small cap stocks. And then from there, I kind of start building my own kind of executions.
And then talk me through how those executions translated into what you trade now. So before you're looking at first green day, first red day, parabolic moves, what has that turned into? And what have you noticed about what applies to small caps and may or may not apply to large or mega caps?
Yeah. So, I mean, I think it's better if I pick like a specific kind of chart, like a specific strategy. So there's a
I can pull a chart up if you
strategy.
want.
Sure. Let me think. What's a good one?
You-
We can look at
Here you go.
um. Okay, we can look at, let's say, Nvidia. This is not really a good example. We can look at SMCI.
And then what time frame do you like?
Daily.
And then
If you
what
go
time do you?
back to mid-February until February 16. So from early February to February 16, 2024 on the daily.
Oh, daily candles. Got
Yeah,
it.
daily candles. Yeah.
Got it. Oh, that's actually really cool that you do that. And then you said
Yeah. This.
mid-February.
Mhm.
Oh, wrong one. My bad.
You can do February 1st, I think. February 1st till just you can just do the entire February if it's easier.
Got it. Yeah, so I have February 1st until today, correct?
Okay, sweet.
And then I have us on a daily, and then I can get rid
Okay.
of this crap. These are
No
just
worries.
moving averages. If it's too noisy, I can dump them, but
Oh, okay. So the chart I want to focus on is the early February. where
Okay.
you can see like this consecutive green candles when the
Yes.
stock went up from 400 to $1,000 in like what, 2 weeks or so.
Hmm.
So you see all those straight up green candles. So
Yes.
when I see that on the daily chart, whether it's a small cap or large cap, like we call this like a parabolic daily chart when the stock just goes up and up and up with very little pullback every single day. And so number one, when I see that, I know that okay, like short sellers are getting squeezed. We saw some similar patterns for GameStop, for like Tesla years ago. Short sellers are getting squeezed, and every single day the dips are getting bought back up. So I know that the shorts are in pain. But at the same time, we also know that eventually, I say eventually, there will be a huge red day to pull back because in terms of price action, this is like, a lot of irrational buying, and also a lot of the buying is from short sellers covering on the way up. We're talking about all the parabolic green candles. So there's a couple ways to play this. When as crazy and as dangerous as this sounds, a lot of times with these kind of parabolic daily charts, we do what I do. I say the trend join long. I'll try to join the trend, and intraday I'll keep buying on the way up because I know shorts are getting squeezed. I'll try to do that on like the third or the fourth day green candle. And a lot of times I'll swing them, even like after a day trade, I'll swing them into those huge. You can see like, near the end, the candlestick in between the last three green candles before the huge red candle. There's a huge gap in between. So this
Hmm.
is how you know like a stock is like taking off. Like it's already going parabolic when there's a huge gap in between the candles, and there's gonna be a huge red day coming soon. It could be the next 3 days, 4 days, 5 days. But then if I will take the longs during those intraday and try to like take advantage of those huge moves. That's when the ATR, the average true range of a stock
Yep.
kind of increases a lot intraday, the range of the stock. So I'll go long during those. I call it the trend join long when I see this kind of daily candles. And then a lot of traders, small caps or large caps, they'll time that huge red candle. So the first red day, the reason it's called the first red day is because you have multiple days of green candle going into it. So there hasn't been a huge pullback at all since, this is what, February 1st was February 2nd. So the stock has been green for the last 2 weeks straight. So when there's a red candle, that candle is going to be huge. So usually when we try to short those, once the stock is actually red on the day, then I'll short those, knowing that the downside is a lot greater because the stock has been so extended, right? It's like pulling a rubber band. When you stretch it so far for so many days and it's just so intense and there's just so much buying tight in the stock, when you release the rubber band, finally, it's gonna snap all the way over and like get overextended to the downside. So then we'll time and try to trade that short day when there is a short day confirmed. Then you just join it to the downside this time. You just short it all the way down. A lot of times you get like a pullback for 2 or 3 days. So then that will be the other side of the trade. Once the parabolic breakout move is done, then I try to trade the first red day. But
I
yeah, those
see.
are kind of the patterns that we look at. We start from the daily, and then I'll trade
What's
it intraday.
What's really funny is I have to be honest with you. I didn't expect this, but you and I
Oh,
look at some of the same things,
oh,
and
really?
we do, but we trade them slightly differently. So
Mm,
for stuff like this, I have kind of different scans that count consecutive up days. Essentially, as soon as there's three or above, it adds it to a list, and then I rank it by gaps between them.
okay.
And I look for a very similar, and it's funny, I call it the same thing, a parabolic up move.
Sweet.
And I'll trade those with options though, but I typically don't try to do it intraday, but I normally will try to run it over a time frame. For your perspective, it looks like some of these intraday periods would be much more lucrative than others. Is there a way that you kind of screen how strong you think the day might be for a move as compared to something else? Because I look at these and these are kind of like little boring days, probably not. Well,
Yeah.
I guess that is a big candle. Maybe this one's a better example. And, it's a smaller overall day as compared to stuff like this that have just much bigger moves. Do you
Mhm.
weight them in some way? Do you have some sort of predictive tool that you try to analyze what you think that up move might look like for the day?
Yeah, I keep it extremely simple. The day I'm trading it, let's say today's Friday, then today's open and today's lower day needs to be higher than yesterday's higher day.
I
So the
see.
stock needs to have already opened and traded above the higher day from the day before. So the candles you're pointing at, those tiny ones, I wouldn't
Yep.
be trading those because they're
Got
under
it.
yesterday's highs.
Got it. Yep. So
Yeah.
the high was here. This one opened. It looked like super close to it. This one you
Mhm.
definitely wouldn't have touched. This one you
Mhm.
wouldn't have touched.
Mhm.
And then this typically then would you think you'd be entering in like something like in here?
Yes. Yeah. Once
Got it.
the stock breaks above yesterday's
Got it.
high. Yeah.
Got it. And then when you're looking for the short, it sounds like this one is a little bit more of a carry trade for you, less of an intraday thing, because you said typically there's successive days that follow that. Is there a reason why you would trade this over a couple days and not to try to hold this for a couple day move? Or is it this one you're just expecting to trade it intraday anyways, capture most of the move? And then this one, you have some sort of data that infers once this happens, it's overwhelmingly probabilistic going to be a continuation move of some sort.
Yeah. So I'm trying to kind of adapt a little bit more now. But for the long side and short side, for both of those, I will only swing it and keep it for a couple of days. If I like, I would open the trade as a day trade, and then
Okay.
I'll close it and looking at the chart and see whether there might be more the next day, and I'll maybe like save like a quarter of my day trade into the next couple of days.
I see.
So that's how
Yeah.
I usually do things, but I'm trying to try to maximize the trade with a separate swing trading account now. I kind of opened a new account in the middle of the year. So that one, I want to start to maximize it and just strictly do swing trades in that account.
Yeah, I love that because one of the things I think about, especially, is you're highlighting, which makes a lot of sense to me with the way that you're playing the parabolic move. But the point that I would be curious about is the gaps that you would miss because
Mm-hmm.
a lot of these moves, and it's from, I run it through Python. So I have like a really large data set depending on the kind of product and the behavior when it starts moving into these parabolic up moves. And to me, that seems like a really strong return source for you potentially. So that's cool that
Mm-hmm.
you're kind of tinkering with that. I love that
Yeah.
that you think of it that way. That's super cool. Well, thank you so much for walking through some of this stuff. I love learning and sharing different approaches to markets. That's kind of some of the coolest parts about this.
Yeah, and like it's really cool that we both see the same chart. We just
That
describe it, and maybe we use both say it's parabolic, but maybe
Yep.
in the beginning you didn't really understand what I was talking about until we see the same chart that we know, oh, we're talking about the exact same chart.
I have to like I did not expect that. I really didn't. I thought that you would be looking for completely different things than I typically do. And then as soon as you pointed that out, I was like, this is actually kind of nuts because there's like heavy crossover there. Even the way that you play the down move is fascinating to me. I play that a little differently, not in terms of following the trend down. I'll do that, but I don't use strategies that capitalize on the down moves as much. So you've
Okay.
actually given me some homework, believe it or not, to take a look at the probability of the big red day and the size of the move on those. So thank you for the homework.
Oh, no
Um,
worries.
a, a couple last questions for you. So I think one of the coolest things that traders that have been in the game for a while can do is to just share not necessarily some of their biggest mistakes. There's a million of those all over the place. But the thing I like to try to explore with people are some of the things that you learned and think other people should know that are not talked about that much. Do you have anything like that that comes to mind for you in your path?
Yeah. So that's also another reason I'm trying to swing trade more this year and even open a new account because I do feel like day traders, for the most part, we leave a lot of money on the table. So I agree with what you said before, like, like you can maximize it more. So that's the one part I'm really trying to
I
work
see.
on this year and next year. I do think that there are a lot of times where, yeah, day trading, you can make a lot of money, but for certain chart patterns, like the one we just talked about, you can make even more with swing trading. We just obviously for swing trading, I would be more selective and only swing trade when I see, certain very, very good setups. I think just day trading wouldn't do it justice. So I think that's a part that I'm trying to learn more and improve on this year. And I don't think I'm I don't think I am allowed to say that, oh, I have it figured out in terms of maximizing my swing trading. But I think just the fact that this year I'm really trying to work on turning some really good day trades into swing trades, I think that's a good start. But I'm not by no means am I an expert in swing trading.
I think that's awesome. And I think more than anything, you're sharing such an important mindset, which is evolution, right? Like you've been trading for over a decade now, and you were talking about that in the way you do things. And I have to say, that's just another pure commonality I find between those of us that tend to trade for a long time is we constantly are looking for other ways we can do things. Like you gave me an idea in this one, right? Like that's the whole point, is that we're always looking for different things. So I'm actually really stoked about the swing training component, and I am eager to hear your results because I have some ideas on what we'll see, and I think it'll be good, to be honest. So I'm excited for that. The last question I have for you is, I know that the Lamborghini is a big part of your brand, right? Like we have the Lamborghini microphone. I don't even know what those things are called. The little microphone cover thing. You know what I'm talking about? It's like the thing that's,
yeah, the
it's the thing
soft
that,
thing. Yeah,
yeah. I guess maybe it's so people don't hit themselves in the face or something crazy. But anyways, I love the joke around the Lamborghini, but I am a car guy and I love McLarens. So I'm wondering if I can find a way to send you a McLaren thing, and maybe once in a while I could get a guest appearance on the mic thing.
We can try. I mean, I don't know. Are McLarens like supposedly better than Lamborghini? I don't know cars, so I mean,
It's one of those things that, like, better is such a strange thing. It's like they're all so over the. I have a McLaren because I love them, but
okay,
like
yeah.
it's all just so over the top. It's all bullshit. So I wouldn't call one inherently better than the other. It's kind of like none of us that are buying them. I run a car club, so like I love driving and stuff like that, but I'm not a professional driver. So you could
Right,
have
yeah.
somebody that's probably a professional driver beat me in a Honda Civic. So, it's, I think it's more about what style you like. But anyways,
Right.
I am curious. I have to see if I can find one of those little microphone cover things and see if I can get just a
Yeah,
one guest stand-in would be great.
that'll be pretty cool. Yeah, if you can find it, I would love to feature a McLaren.
Perfect. Well, I love that. I'll keep that door open. This is good. I mean, this is a great win for my side of the deal, because I'm going to slowly pressure you,
Oh my
hopefully more and more,
God.
to looking at options, and then maybe we get them clearing out there. So I call it a great victory across the board. But it's time for you to run, and I am just so appreciative for you to come hang out for a while, especially because you really do bring such a different perspective. And my hands down favorite thing about you, it's what drew me to you in the first place, is that I find that there are so few genuine voices in this space, and it's very cool to find one that I would consider to be very genuine. So thanks for doing everything that you do, and thanks for coming to hang out for a while.
Thanks, Eric. Yeah, that was fun conversation. I promise at some point I promise to properly look at options and give it a shot. I can
Let me
promise
know
you that,
whenever
but that's
let
about it. Yeah.
let me know whenever you do. I'll literally jump on a call with you, and I will hold your hand all the way through it to make sure that it's not a bad experience, because I think especially for your style of trading, they really could be very cool. But yeah, we'll have to tinker with them. Thank you so much for your time. And then for people that want to find you, like I said, I'll throw your website and all of your other social media handles in the description. Is there anywhere else that you want to direct people to or anything like that?
I think just my YouTube, Instagram, my website, socials, all that good stuff is good.
Perfect. So you guys can check all of that out in the description below. Thanks everybody for hanging out. Be an outlier, and we'll see you guys later.